Big banks are quietly buying Bitcoin. Wells Fargo increased their Bitcoin exposure from 26 million to 160 million in Q2. Now, the real reason Bitcoin and Ethereum and altcoins are seeing a little bit of wonkiness today is because almost $6 billion worth of options expire in the cryptocurrency market today. Yet the market is a little bit sideways, a little bit shaky, and people are spreading a lot of fear for a possible bear case scenario. Now, this took a while to write up, and I'm going to talk about what I actually think is coming in the market and what I just did to position myself. So watch until the end of the video, like the video, subscribe to the channel if you are not subscribed. Join the family on this journey to financial freedom, guys. Without further ado, let's get into the video. So we have a bearish case set up on the SPY where several catalysts can trigger a sell-off and a healthy correction on the SPY. And I'll also give you levels to where the SPY would collapse if it hit and why we can't get above a specific level. Now, August 22nd, we have Fed Chair Powell to speak amid speculation on rate cuts, which is going to be a very important piece of the puzzle as to where the stock market is going to go leading into rate cuts mid-September. So August 22nd, we have a catalyst, Powell speaking. Then we have a catalyst, August 29th, August PCE. Then you come to September 11th, which is the last catalyst prior, well, there are smaller ones, which is the last big catalyst prior to the rate decision, and it's August CPI. All of these are going to be huge factors as to what is going to happen during the rate decision and how the markets will react following the rate decision. Now, I do want to point out that I do not believe that the bear case is going to be the case. I think it's more so 80-20. In other words, 80% the SPY, the stock market, the crypto market will continue to grind higher, and 20% chance that we are going to see a massive sell-off over the next couple of weeks, and I'll explain why. Now, I have analogies to break this down in plain English for you, but pay attention, crank the audio on this video, and listen closely. Why we won't correct here on the SPY. Now, listen up. Again, this could be wrong. It's an 80-20 scenario, but just be open-minded. Number one, the Fed's overnight reverse repo usage has collapsed from over $2 trillion to just tens of billions, which is a huge difference. And this means that a lot of idle cash has moved into the market via T-bills and other investments. That's generally supportive for stocks. So here's an analogy, guys. Imagine money market funds are drivers with big bags of cash. For the past couple of years, they've been parking their cars in the Fed's garage every night because it's safe, cheap, and convenient. And when the garage is full, over $2 trillion, those cars and all the money inside aren't driving around the town buying anything. Now the garage is nearly empty. So all the drivers are taking their cars back onto the road. They're pulling into shops, treasury auctions, restaurants, corporate bonds, and markets, stocks, right? More cars on the road equals more spending and activity in the economy and financial markets. So an empty garage means more traffic or liquidity in the market, which tends to boost prices and risk appetite. So until something blocks the roads, aka a catalyst, which is why one of these catalysts can spark downside on the market. Now, another reason why we are not going to see correction here. Q2 earnings beats remain strong. More companies than usual are reporting profits that are higher than Wall Street's expectations. And historically, when companies beat expectations at a high rate, it signals corporate health and can give stocks a boost. AA2 Bull Bear Spread Negative, or the American Association of Individual Investors, runs a weekly survey asking people if they're bullish, bearish, or neutral on the stock market. A negative spread means more people are bearish than bullish, which often is a contrarian signal. When retail sentiment is gloomy, markets have a tendency to surprise to the upside because the selling is already done and pessimism is priced in. So in short, guys, in plain English, quote unquote, dumb money, when dumb money or retail investors say sell, markets pump. That's plain and simple. And the surveys are showing that retail is still being conservative in their buying or kind of standoffish. Now, rate cuts. Number three, future markets are still pricing in multiple Fed rate cuts starting in late 2025 and no hikes. Even if the exact timing shifts of these rate cuts, which expectations are in September, the perception of easier policy ahead tends to support equity valuations, and job growth on top of that is still positive. but wage growth has cooled a bit. So consumers keep spending, but inflation risk from wages is less of a worry. So kind of a Goldilocks scenario here. Number 4, and this is where it gets important. This is where we talk about algorithms and options, okay, and volatility. So market dynamics. Trend following funds, CTAs, and systematic strategies remain net long equities until there's a big volatility spike. They tend to keep buying on the dip. So in English, think algorithms are buying until something collapses. Now, number 5, dealer gamma is positive. Market makers are acting as buyers on dips as well. And right now, a lot of SPX, SPY open interest is in short dated calls sold to retail or institutions. When dealers are long gamma, like now, they buy stocks as prices fall and sell as prices rise, creating a dampening effect on volatility and keeping the market in an upward drift, which is acting as an invisible cushion under the market until a big catalyst breaks it. Plus, funds that had protective puts into earnings and summer events are letting them expire or selling them now. Dealers who were short futures against those puts have to buy back their short hedges, an invisible bid under the surface, to say the least. Now, number 6, the VIX around 15, which is very low. It means funds are comfortable selling volume to pick up yield, and when volume is sold, dealers buy equities to hedge, which again supports stock prices. So we have so many things that support a melt up in the market into the rate cuts, but we have possible things that will trigger a catalyst to the downside. Now, here's where it gets interesting. I have a red line and a green line pretty thick set up on the chart. What do these lines mean? Well, we talked about CTAs. We talked about algorithmic buying pressure to the upside as well as gamma exposure via market makers. These are what these lines represent. Down below 625, if the market breaks below this red line, you're going to see likely very fast selling pressure. That is because algorithms below this level basically remove that barricade and will begin net selling at a very, 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 very fast rate. So we want to hold 625 on the SPY unless you want some sort of quick move to 600. All right. 606.50, 600. Ultimately, under that, to be realistic, if things weren't exploding to the downside, you would want to watch 620, 613, 606.50, 600, right? Roughly, give or take some change. Now, what is this green line up here? This is sort of this gamma hedging wall. We couldn't really hold above 646. Reason being is because market makers are becoming net sellers above this level to kind of keep things neutral. Okay. Once this gets absorbed, this price will raise and the SPY will again slowly chop higher, possibly bringing us to 655, 657, so on and so on and so on. And in a severe market melt up, 677 by end of year. Crypto sold off, took a hit, but we are still holding actually the first key level that we would want to hold, which is right here at 117. A couple days back, we said, hey, we need this weekly candle over 117 for it to look pretty good. We came up actually and we broke above the next fib level, and now we're kind of just cooling off. So things are still looking very good. A lot of options expiring in the crypto market today. Now, Mudang is a crypto that I got a fill on today. It's just very low market cap, high risk. Ondo as well. Altcoins would see this very, very bearish case scenario alongside the SPY if we saw bear case scenario. So whatever you're rooting for, let me know in the comments down below. But I think there's way more to back that this isn't going to happen. I just want to point that out there. And that is why I'm getting some fills in on these altcoins. GameStop, 22.96, basically flat on the day. We got a daily cross to the downside on GameStop. We still have a weekly to the upside, okay, but a daily cross to the downside. The last time we saw this, well, prior to right here, right? The last time we saw this was back here, way back here, September of 2023, which unfortunately, coincidentally enough, looks like a very similar chart, which would mean, again, I'm not calling for this, just to put that out there. We wouldn't see a squeeze for a very long time. Do I think that is going to happen? No, because of how bullish the market is. But if the SPY does this, and if altcoins do this, GameStop does this. Okay, I don't believe that's going to happen, and I could list probably a dozen things off right off the bat. You go to such a low level, there's obviously going to be buybacks. Market's still in a very positive manner. Crypto still very positive. GameStop holds a ton of Bitcoin that they're very, very, very profitable on, right? I could just go down the line and probably talk for like 10 to 20 minutes as to why that wouldn't happen. Just want to prep you that I do still believe we are about to see a squeeze higher. Bollinger Bands are very tight on the daily time frame. RSI is still very cool below the 50, and Japanese 10-year government bonds, a pressure gauge that we kind of use to correlate how quickly and how explosive GameStop will be to the upside, is pressing up against this ceiling again at 1.572%, up 1.42% on the day. And you can see this kind of top right here that we wicked above once, twice, 3, 4, 5 times, and now the 6th time likely looking like we are about to break higher and put that pressure on GameStop swap positions. So we could see an explosive move very soon, likely to the upside, alongside the market as well as altcoins. So in my opinion, this is a dip buy opportunity today, and this dip buy could possibly last until Monday. But until then, I will be buying and adding to positions. Alongside that, GameStop's earnings is coming up, and if you haven't liked the video, guys, please do so. It helps me out. It's free. And subscribe to my channel. Power packs are sold out on GameStop. Well, some of them, most of them. Insane demand over here, right? Will this show up on their earnings coming up? I'm not sure. Probably some of it, but overall, this is just very good. They're doing so well as a company. I'm looking at Ethereum Classic's chart instead of AMC's because Ethereum Classic tracks AMC, or AMC tracks Ethereum Classic, but Ethereum Classic sort of tracks Ethereum. Now, I want to talk about this. Ethereum Classic made a high back here, same time as Ethereum. Same thing right here, made a high, very similar timing to Ethereum. Right now, Ethereum Classic has this double top pattern. Ethereum also had this double top pattern. Now, Ethereum actually came out and broke this pattern and now is trading above the trend. Ethereum Classic is very much so behind, meaning I believe we are about to lead with an explosive move towards 50 on Ethereum Classic, which would also give an explosive move on AMC. Long story short, I've talked about AMC coming up 115% in the last video alongside GameStop. That would bring Ethereum Classic up to around 50 to 55, which this is just all my expectations. Moving on, shout out anyone holding Celsius. Once again, I love giving shout outs to this. This thing just continues to rally. UNH, let me know if you guys bought this. I talked about it yesterday, how Warren Buffett bought into this, as well as several institutions actually bought in. I didn't mention that yesterday, but I found out today that a lot of other bigger players ended up buying into UNH. Is this too late to buy? It's up 14%. Probably not. In my opinion, this is probably just going to continue to rise and at least fill a gap to 377. If we come and I want to just take a look at the forecast over here. So possible back up to 440 or possible back down to 198. I don't think the 198 is coming. I think probably 440 towards end of year is more plausible on UNH. But yeah, again, guys, let me know if you are jumping into this one. I mean, a $5 billion investment shows true, what's the word? It's on the tip of my tongue. I can't think of it. True conviction on the play. And it's Warren Buffett, right? So, I mean, just put that out there. Last but not least, shout out to anybody who held Intel. We have been buying it on the long-term portfolio. Trump administration said to discuss taking a stake in Intel. So shout out Intel. Overall, guys, I have given you all of that stuff for free. I hope you enjoyed it. I hope you found value out of the video. Like, subscribe, join the members only. Join the Discord, top link in the description, all that other stuff. I got a ton of beneficial links for you guys down below. My eyes burn now, and yeah, that is it, guys. I thank you so much for all the support. Again, I couldn't do any of this without you guys, and full time, I appreciate it so much. Make sure to get in the Discord so we can chat, talk stocks and crypto, see my trades in there, and let me know if you are buying or selling in this market or just kind of sitting on cash. I love you all. God bless. Enjoy your weekend. We will have videos uploaded over the weekend. Lottery stocks out.